Ladies and gentlemen, my name is Greg Michaelowski. I'm the Director of Client Education and Technical Analysis for ForexLive.com. And I'm going to talk to you today about American football and trading. So why American football and why trading? Well, if you live in the United States, you know that the American football college season starts off today. And my son, Brian, happens to be an American football college coach for the University of Memphis. So go Tigers. Because I have a son who's a coach, I get to talk to him a lot about strategies for trading and what goes into winning and losing games. And I also think that there's a lot of parallels between team sports or athletics and trading. In team sports, you have it's broken down into plays. Think of them as trades, and you go along and you win some plays, you lose some plays, you win some plays, and you lose some plays. In some plays, you attack a trend and you score a touchdown, or you intercept a pass for a touchdown, or something happens on the field that swings the balance more in your favor, and you end up being profitable. You end up winning the game. In trading, it's a lot of the same thing. We go along as a trader, as a retail trader in particular, and we have some wins and we have some losses, and we have some wins and some losses. And as long as we can keep those losses defined and limited, we have the chance to play another play and to continue on that game against these big boys out there who are really in control of the market. And the way we do that is by defining our risk and limiting our risk against key technical levels. And as long as the market agrees, or those big boys agree, we have this chance to risk a little, to make more than a little, to score that touchdown, to get on that trend, and ultimately, if we have those little wins, those little losses, and then able to catch a trend along the way, here and there, we're going to win the game, okay? We're going to see our account balance grow over time, and that defines winners and losers, and we know that in retail trading, there's a lot of losers out there, so you have to understand how you can become a winner, how you can win those games on Saturday, and you have to put that work in to get to that point. So, with that said, I was speaking to one of my attacking currency trends traders. He actually wrote a comment, and he said this. He said, "Before I closed down for the night," he lives in Australia, "I put this is yesterday after the unemployment report, I put a short on in the euro versus US dollar around the 112 level with a stop loss just above the 100-day moving average." Let's stop right there. Now, we saw in the unemployment days trading, we saw the price move sharply to the upside, and then we started to see it come back down. And when it came back down, it went through this 100-day moving average. This solid line right here is the overlay of the 100-day moving average. It was at the 112.13 level in trading yesterday. The market went below that key moving average, that key technical level, and John decided to sell at the 112 level, and he put a stop just above that 100-day moving average, and went to bed. Okay, his hope was that the break below the 100-day moving average would continue, and we'd see the market move to the downside, which it did. Now, the problem was that John's stop loss was at the one just above the 100-day moving average. And as you can see, the price moved just above that 100-day moving average. Now, where did it go? Where did it stop on that corrective move? And on the corrective move, it ended up stopping right here against another overlaid moving average. And that overlaid moving average is the 200-hour moving average. That's the green line in this chart. And for those people who follow me on ForexLive.com, I'm really keen on 100 and 200 bar moving averages. I also like to look at different time frames, not only just the daily chart or the 5-minute chart like this chart, but also the hourly chart, because I think that gets into your opponent. the market. You get to understand your opponent much better if you understand what the intermediate term traders are trading against, like the 200-hour moving average. Paralleling that to the football, it's really understanding, if you're on offense, the defense, or on defense, the offense. It's understanding that this 100-day moving average may be a linebacker, and this 200-hour moving average may be that defensive back. And you need to understand what the linebacker is doing, what the defensive back is going to do if you're on offense. And if you don't know that, then you're liable to run into problems against that defensive back. So in trading, we need to see the whole field. We need to understand that not only that 100-day moving average is there at 112.13, but the 200-hour moving average is also there, and that level is just 4 or 5 pips away from that 100-day moving average. What John further says is that his stop loss was taken out, but what he noticed was that retracement went right up to that 200-hour moving average and then fell away as per his plan, but realized that both those levels were true act levels in play. He just didn't recognize it at the time. So the good news, and the great news actually, is that John lost a little on the trade. Okay, 13 or 14 or 15 pips. I'm sure it was 1% or less of his account. Okay, so he's able to play the game tomorrow, on Monday, on Tuesday, on Wednesday, on Thursday, on Friday. He laments the fact that he didn't stay in it long enough for the market to gather momentum and for him to win the game on Friday, win the game on the employment day when the market indeed went to the downside. But let's be honest, that has happened to me on a number of different occasions, and to probably a lot of you traders out there as well, where your stop just gets taken out before another key technical level. There's no doubt in my mind that there'll be other trades where the level is perfect, where the stop is just above that 200-hour moving average, where the price moves lower from that point and you have your touchdown. So that does it for this parallel, if you will, between football and trading. I hope you liked it. If you liked it, give it a thumbs up. If you didn't like it, go ahead, give it a thumbs down. That's okay as well. And I'm wishing you all a great weekend. And one final thing, go Tigers.